I'm so excited to be here. So let's get started. I'm going to go ahead and share my screen and we're going to dive in. We're going to dive into profitable pricing. So as Colleen mentioned, we're going to be focusing on profitable pricing for your service-based business. Now, if you are a product-based business, what I'm going to teach today, you can apply it, but it is not specifically geared to product-based businesses. This is specifically geared to service-based businesses. Now, first things first, let's go ahead and get the workbook. If you can, go ahead and scan the QR code. You don't need the workbook, but it is beneficial because we are going to be talking about a lot of numbers, and it's always helpful if you have a place to jot things down. If you can't get the QR code to work, or if you'd rather just type in the web address, just go to ebbencashflow.com/pricing. I'm going to go slowly as you can get your pricing workbooks. So moving forward, what I'm going to cover today, I'm going to start with my definition of a cash flow system. Not everyone's definition of a cash flow system is the same. The more I do this, the more I realize that people have different ideas of what a cash flow system is and what it isn't. So I'll tell you what my definition is. And then we're going to dive into the calculations and how to have a profitable price for your service-based business. And then I'm going to give you time to ask any questions, and we're going to wrap it all up. Hopefully, you'll be able to go away with some confidence in your pricing or what you need to do next. So let me tell you a little bit about me. I am in the honeymoon stage of my life, and I say that with a huge smile on my face because I'm not newly married. I have been married for 33 years, but I love my life right now. I can't imagine, I can't believe where I'm at. So as Colleen had mentioned, I'm currently living in Saipan. And the first question I usually get if somebody doesn't go straight to Google is, where is Saipan? Saipan is a 3-hour flight south of Japan, and we're about 120 miles north of Guam. We are in the Pacific Ocean. So you can imagine, I live on a tropical island, and we've lived here for 9 months. We hit 9 months yesterday. And it's been an amazing experience. I'm an empty nester. My youngest son graduated from high school last year, and it was at that time we decided to go ahead and start living our dreams. Business owner, and I'm a reformed doer of things the hard way. I always have had a tendency to do things the hard way, but I'm trying to simplify. And that's one of the things that I did when we moved here, was sell everything and live an intentionally simpler life. This is my motivation. Many people will often ask you, what is your why? And my why is my family. And this picture down here, this was taken last August, where it was the first family vacation that we had gone on with everybody. And we took a cruise to Greece. And this was taken at the Venice airport, where my 3 adult kids went back to the United States through Paris, and my husband and I flew back to Saipan through Dubai. So we literally split the world and went in opposite directions. Before I moved to Saipan, I loved to ski. So you could find me on the slopes at least once or twice a week. And then these 2 pictures in the other corners, I am a new Swiftie. So I actually went to the Taylor Swift concert in Tokyo, and my husband was a really good sport and went with me. And then on that same trip, we were able to go to the Imperial Palace in Tokyo. So you can just see, I really love to travel. I love adventure. And like I said, I am living my best life. So let me tell you a little bit about me and my entrepreneurial journey, because in my head, I've been an entrepreneur my whole life. I grew up being raised by an entrepreneur. At one point, I stopped to count how many businesses I could remember my dad starting, and there were 15 that I could remember in my lifetime. And when he started a business, he did it from the ground up. He was also a contractor, so he would build the building, build the business, and then turn around and sell the business. And so when my husband graduated from dental school, I took that opportunity to say, let's start a business. He wanted to just go ahead and work for somebody else. He was fine with that. And I'm like, no, why wouldn't we just start a business? And, because that's what you do. And of course, we had to build a building from the ground up at the same time. So I was graduating from school with my finance degree. At the same time, he was graduating from dental school. So we started the practice and built the building. And this was the building. I was able to help design it. And then I did every aspect of the dental practice except the dentistry for 11 years. During this time, it was in 2019, I became a certified life coach. I was still running the practice, but I decided I really wanted more. I needed more skills. I needed better management skills, and I needed to understand myself better. So I also became a certified life coach during that time. This picture, you can see, this was the last day of our dental practice. We were leaving. We sold the dental practice in April of 21. You could see I've been crying, cried my eyes out. It was a sad thing to watch it go full circle. But when the opportunity came to sell the practice, I knew I had to do it. And so we snapped this photo as we were leaving. And then this was the next day. You could see I don't have any mascara on because I was bawling my eyes out just right before this, but I was so happy. This was taken at the title company as we were signing over the practice. And then we just moved to a new phase of our life. So let me talk about creating a cash flow management system and what it means to me. So we have to figure out where you are now, where you want to go next, and where you want to end up. I think of a cash flow management system like an irrigation system. Now, irrigation is a way to get a resource, which is water, to where you need it to be. And if you don't have a cash flow management system in place, I look at it more like this flood irrigation, which it does allow for the resource to be where it needs. But you can see in this picture, like this area, the water is a little bit maybe too deep. You got a little too much of one resource. And then down here in the corner, you can see that maybe there's not enough of a resource. Where a cash flow management system is more like a drip irrigation system, where you have just the right amount of the resource in the right place at the right time. So I look at the cash flow management system as having the right amount in the right time and at the right place. So let's move on. So my definition of a cash flow system, I've created the Palm cash flow system, and it has multiple items in it that starts with money mindset. Now, a lot of people have a money story, and you may not have dove into your money story, but there is an underlying money story. And when I like to start with people asking the people a question, when I give you this next phrase, I want you to fill in the blank, and feel free to put it in the chat because I'd love to know what you're thinking. But when I say money is blank, fill in the blank. Everyone has a money story. And really understanding that money story is really important into being able to run your business and have a cash flow system, because the money story will come up multiple times. Next is the financial foundations. Now, a lot of businesses, especially online businesses and creatives, don't really have the finance and the management background. And so as part of my system is I make sure that everybody has at least the financial foundations in place. Next is profitable pricing, and that's what we're going to be talking about today. We got to make sure that the price that you set for your services is profitable. And packaging of services. A lot of times we think of packaging as to what is good for the customer, but we also need to make sure that we're packaging our services to be beneficial to the business. And then entails accounts receivable and accounts payable. And again, you can structure those to where it helps get the cash when you need it the most. And budgeting and capital allocation. Everyone needs a budget, and every business needs a budget. And then managing the actual cash. A lot of times when we talk about a cash flow management system, this is the portion that people think of, is how the cash is allocated in your business when it comes in. but it's just a piece of the cash flow system. And forecasting and modeling, we need to know what you have coming in the future so you can plan. And then we need to talk about tax strategies. Now, I am not a tax professional, but I do have some experience. I can at least tell you what questions to ask your tax professional. Today, we're going to be talking about the profitable pricing. So let's get started. So profitable pricing a profitable business begins with profitable pricing, because if you don't have your pricing set up to where it includes intentional profit, it doesn't matter how much you sell, you're never going to be making a profit. So we want to make sure that you at least understand what your baseline price is so that you can have a profitable business. So the PALM pricing method includes several items, and we're going to be talking about profitable pricing mindset. Again, mindset is so important that if you don't have that mindset in place, then you won't get very far. Then we're going to talk about the financial basics, and we're going to do the work. We're going to start doing the calculations, which we're going to look at the owner inputs, the staff inputs, the direct costs, clients and duration, other inputs, and then calculations. And then finally, I hope that you leave this with some actionable items to where you can have confidence in your pricing. Okay, so the first thing first is a profitable pricing mindset starts with being a beginner. When you are a beginner, you might be a seasoned business owner, but there's usually always an opportunity to learn. So if as you're coming to this class or to doing something new, be a beginner, be willing to learn something new, and maybe it doesn't actually apply to you exactly the way it's presented, but look at it to see how it can be applied to you and how it would apply. So this video that I'm going to play, I took last week when I was in Korea. So let me show you. Let's see if we can hear it. Sound's not working. Okay, that's all right. So I'll just tell you what happened. So this was as I was leaving the security area of immigration in Korea. And I just said, I did it. I travel a lot, but I don't usually travel by myself. And I was actually traveling by myself, and I went through immigration by myself. Now, most of the time, I didn't have any idea what they were saying or what they were telling me to do. And I tell you, my anxiety was really up there. I was like, I don't know if I'm doing this right. But once I got through immigration, I just had this overwhelming feeling of, I did it. And so I grabbed my phone and I just said, I did it. I just got through Korea immigration all by myself. And so I just grabbed a video of it. And, I think that's so important, is to celebrate those successes. And if you're willing to be a beginner, if you're willing to do something new and maybe work through that anxiety, you can have moments like that. And whether I'm 52 years old and I wanted to take a video because I went through immigration all by myself. And then progress over perfection. The other thing that I'm doing, since I have moved to Saipan, I have started paddleboarding. Now, this is not a picture of me, but it does represent the paddleboarding. And if you've ever paddleboarded before, or if you're new to it, often when you're learning something, especially paddleboarding, you start out on your knees. And then as you become more stable and you're able to feel more confident, then you move to standing up on the paddleboard. And sometimes even, I actually went paddleboarding last night, and I spent most of my time on my knees because I hadn't been in a while. So I wanted to gain that stability again. But then towards the end, I went ahead and stood up. So just know, sometimes you're going to be on your knees as you're learning something. Sometimes you're going to be brave and you're going to stand up. But just be willing to look at the progress that you have over perfection. Nothing is ever perfect. Okay, so let's talk about the financial basics, what we need to know before we start. So there's 3 things that you're going to need to know before we can calculate your profitable price. Now, the first one is owner's pay, which I also like to call conscious spending. And then their operating expenses, which is intentional spending, and then taxes, which is a percentage of top line revenue that you're going to get from your tax professional. We're going to talk about those a little bit more. So first is the owner's pay. Now, I love Ramit Sethi's book, I Will Teach You to Be Rich. He talks about a conscious spending plan. A conscious spending plan lets you spend extravagantly on the things that you love and cut costs mercilessly on the things that you don't. The thing I love about this conscious spending plan is that it does allow for some emotional spending. It allows you to spend money on things that bring you joy. So before this, I was a huge Dave Ramsey fan, but I honestly felt a lot of scarcity by using his plan. And I didn't like that. And I didn't want to bring that over into my life as, I lived longer and longer. And so I started adding in the things that would bring me joy. And maybe, it's one of the things that brings me joy that I love living in Saipan. I can get a 90-minute massage for $35. And so you better believe I'm getting a massage when I feel like, not splurging, but just I'm like, I have that built into my budget, and it's something that brings me joy. It's really important as you're looking at this to fund the life you want to live. You might not be able to afford everything, but it's really important to put those things down that you want in your future, just so that you have a target, so you can see this is, maybe it is I want to be able to do a massage once a month or twice a month, or what are other things that you want to include. So just be sure that you put that down and have that top of mind so that you have a target to work for. Next is the operating expenses. Now, operating expenses is different than, because I call it intentional spending versus conscious spending. Intentional spending is for your business is calculated and data driven. In business, you should only be spending money on things that increase revenue, reduce expenses, or keeps you out of jail. Now, there's no room for emotional spending in your business. So if you cannot unequivocally say this increases revenue or reduces expenses or keeps you out of jail, then it's something that you need to get rid of. Now, a lot of times we think that if we get a new software or something like that, it's going to reduce expenses. But it's really important to be evaluating those expenses as you go along to make sure that you are getting the return on the investment. So how do you do this? You need to calculate these totals. If you already have an idea of how much money you want to take out of your business to pay for your personal needs, that's the number you're going to use. If not, there is some pages in the workbook to help you figure it out. Now, so you're going to be calculating for your owner's pay requirement, the amount of money you want to take out of your business for your personal expenses. And you're going to calculate 3 different numbers for this. You're going to calculate the essential items, your essential plus your optional, and then your future. What are the things that you want to bring into your life in the future? And then you're going to jot those totals down because we're going to use those in the pricing. Then you're going to do the same thing for your operating expenses. You're going to see how much money you need on a monthly basis to cover the operating expenses of your business. And then again, 3 different items: essential, essential and optional, and your future. Okay, so this is the moment of truth. A lot of people have a moment of truth, or you might be able to go back in time and know when your life changed, when you knew something was going to shift. And for me, this was in November of 2020. We had a really good year in 2020. Not a lot of people did. But it was at this point that I had a meeting with my accountant. She had been my accountant for over 10 years, and we were getting ready to talk about my tax planning for the rest of 2020. Now, she lived an hour away, and we could have done it over the phone, but we had such a good relationship that I would always just go and see her in the office because I love to just chat with her. And I knew this meeting was going to be different because when I walked in the room, she wouldn't meet my eye. And I sat down and I'm kind of like, kind of trying to figure out what's going on here. Like, Like, we're buds, we're friends, we've been working together for a long time. What's going on? And she took a deep breath, and my stomach started to sink. And she says, well, the good news is it looks like you had a good year. And I'm like, oh, whenever somebody says the good news is, it's followed by, but the bad news is. And I said, yeah, what's the bad news? It was at that point that she proceeded to tell me that I had an estimated tax bill well into the six figures. And I wanted to cry. My stomach dropped, and I knew there was no way I didn't have that cash. I didn't have that amount of cash. And it was at that moment that I knew I needed to do something different with my cash, because I had done what I thought I was supposed to do when you get an influx of cash. I'd paid off a lot of debt. I had taken out a little bit of fund money, but I did not have that cash set aside. And so it was at that moment that I realized I needed to do something different. I needed to find a better way to manage my cash. So that brings me to, don't forget about taxes. You need to be setting aside a percentage of your top line revenue. Again, you're going to get this percent from a tax professional, whoever helps you do your taxes. It's not the effective tax rate. It is a percentage of top line revenue, and you're going to be setting aside this amount of money every time you get any money. Now, my accountant did what I asked her to do, which was minimize my tax outlay, which was, I was paying quarterly estimates, absolutely. But she had minimized that. She had figured out a way for me to pay as little as possible. And I was very much doing that, but I didn't do what, I didn't plan ahead for a really good year. She was based on the estimates. I was paying my estimated taxes, but I was not paying nearly enough. So if you want for this particular exercise, if you don't have a chance to talk to your tax professional to know how much it is that you need, go ahead and give it an estimate. A good estimate is between 20 to 25% of your top line revenue, especially if you're an online creator. But again, go ahead and make sure that you're checking with your tax professional. A third method to do this is to review your old tax returns, but that is the least effective. And so talk to your tax professional. So with those three numbers, so we're going to want your operating expenses number, your owner's pay requirement, and a percentage to set aside for taxes. Then we can dive in to calculating your profitable price. Okay, so let's talk about how to calculate your profitable price. I like to think of it, now that we have all of the ingredients, we have all of the numbers that we need, we're going to put them all together and make a beautiful cake or make a beautiful dessert of something that will help get us what we need. And so with that, we're going to be looking at several different things. We're going to look at the owner's pay. We're going to look at staff costs. We're going to look at direct costs, which include the operating expenses, but it's also going to include intentional reserves. Now, this is something that a lot of people forget when they are calculating their prices. And then there's other inputs, things like intentional profit, taxes, and then we're going to do the calculations. So we ready? Let's dive in. So this, if you came in late, there is a workbook that was at the beginning, and Colleen can go ahead and drop that in the chat. It's ebandcashflow.com/pricing. You can get the workbook. If not, feel free to go ahead and screenshot this, and you can just use this. It's got all of the formulas for your calculations, and you can use it this way also. So the first thing we're going to do right up at the top is enter in line A your desired monthly owner's pay. And that's what we talked about earlier, how much you want to take out of the business every month so that you can live on the personal side. And then we're going to look at staff costs. In line B, it's the number of hours per month that your staff needs to plan, facilitate, and administer whatever it is that you are doing. And Then you're going to put the staff rate per hour. Now, if they are employees, you want to make sure that you include all of the benefits and all of the payroll taxes. If they're contractors, then you don't need to worry about that. Just put your hourly rate. And then you're going to do B times C to get a total staff cost per month. I am going to I'm going to show you on a calculator how to do this too. And then so you're going to calculate the staff cost per month. And then we're going to go to the next section which is technology and office expenses. Now, I say technology and office expenses because these categories, E through J, are based off the IRS categories. But if you did it the way that we were talking about just previously, you can enter a total. You don't have to break it out. You can just put everything under other costs and miscellaneous if you have a total. If you don't have a total and you haven't figured out what your operating expenses are every month, you can use the categories. You can pull these off of one of your profit and loss statements, or you can pull it off an old tax return. Maybe you have your new tax return done, but we want to get your current monthly costs. So 2 ways to do this. You can fill it out step by step, or you can just put in the total to make sure that you are getting all of the things that are in your overhead. You want to make sure all of your operating costs are included in this amount. And then you're going to look at other costs and miscellaneous. This is kind of the category for everything else. If you're doing your calculations based on the previous categories, other costs and miscellaneous is where you put everything else that's included on your profit and loss statement to make sure that you're covering your operating costs. And then additional expenses. So this part you're probably going to leave blank at first, because this is the line where you're going to add in things like, if you want to add a new employee, how much would that affect your pricing? Or if you want to buy a new software, this is where you can run the numbers once without the additional expenses and then run it a second time to make sure that you can see the impact of that additional expense on the pricing and your profitability. And then intentional reserves. This is my favorite category. This is the least talked about category. This is intentionally setting aside money for that rainy day. It's your rainy day fund, your emergency fund. But I want you to start being very intentional about setting aside a set amount of money every single month. Whether you are an established business owner or you're new, you could start small with $50 or $100 a month. That you're just setting aside money. And it's going to help you get through the ebbs and flows of the cash in your business. So let me switch over to the spreadsheet just so that you can see how this works, to make sure that you're doing your calculations correctly. So for this one, I'm going to just give an example of, I want to take $3,000 out of my business every single month. And for staff inputs, let's say I have somebody working 20 hours a month and I pay them $15 an hour. You can see that the staff cost per month is $300. And then I'm going to fill these out like I'm looking at my numbers, because you want these numbers to be specific to your business. So maybe your technology and office expenses are $150 a month, marketing and advertising, $500. Professional and contract services, this would be things like if you have your accountant or your attorney, or it could be something, contract services would be maybe you have somebody that is doing some video editing for you. So what is the monthly rate that you're going to set aside? And then travel and meals, I'm just going to put something in there. Insurance, interest, and taxes. This is your business insurance. And professional development. Maybe you go to some continuing education, and this is the monthly amount for that you want to set aside. Other costs and miscellaneous, and then additional expenses. I'm going to leave this blank for now. And then intentional reserve, I'm going to put in $100. So then you're going to add those all up, and you're going to get the amount for your direct costs. Okay, we're going to move on. But how are you doing? How's everybody doing? Are you following me? Take a deep breath. We're talking numbers. Nobody likes to talk numbers. I think numbers are one of those things where we like to pretend. I know when I first started my business, I would pretend with my numbers and be like, oh, I did pay with that, pay from my personal business, personal on that, even though, and say, hey, look, I'm profitable, but oh, I've got all of these personal things that I'm paying with my personal card. So numbers are hard, but it's, as business owners, we need to do it. Okay, so the next section on calculating your profitable price for your services, we're going to look at client information and duration. So number of appointments per client per month. Now, this is geared towards like coaches or things like that. But again, if it doesn't specifically apply to you, how could you adapt this to make it work for you? Maybe you have a project, and how many times this month are you going to meet with that client on the project that you're working on? And then how many clients per month can you handle? And then you're going to times those two together to get total number of client calls per month. So in my example, I'll show you on the calculator just to make sure your calculations are right. We're going to do 2 appointments per client per month, and we're going to do 10 clients per month. So that's going to give us the total of 20. And then how many months your client package length is. So maybe you meet with a client for 3 months. You would put a 3 in that line in R. And then we're going to calculate the base costs of monthly services. So I'm going to get my slides caught up with me here. So calculate the total number of client calls. And then this is where we start doing the calculations. I know Common Core math is different nowadays, but I'll tell you how I do the parentheses. You do inside the parentheses and work out. So I don't know if that's right, but I know I've tried to do my kids' math with them and they just don't do it the same. So you're going to times line A times line R, and then line D times line R, and line N times line R. And then you're going to add those numbers up to get your base cost for your services. And we're going to talk about income and self-employment taxes. So this, again, remember where that was that top line percentage of number that you get from your tax professional, typically between 20 and 25%. You're going to put that percentage in line T, and then intentional profit. Intentional profit is also a percent, and this is what a lot of people do it backwards. They do all of their income, and then they minus their expenses, and then what's left over is profit. But we're going to flip that formula on its head, and we're going to take a percent of intentional profit before we even look at all of the expenses. So if you're just starting out, typically anywhere from 5 to 10% is a good place to start. You don't want to go lower than 1%. You want to have some intentional profit. This is the bonus that you get for being a business owner. This is the reward above and beyond the salary that you're taking for owning this business. And you can also use it to help you scale, to help you expand, or to help you pay off debts. But you want an intentional profit included. And then we're going to do the calculations. So again, you're going to start from inside the parentheses. You're going to add the T plus the U, do it as a decimal, because then you're going to do 1 minus that total, and then divide it to get your total cost of your base program. So let me show you again how this works in a spreadsheet so we can make sure that your calculations are matching my calculations. So if we do 2 as the total clients number of appointments per month, and we're going to do 10 clients per month, we get 20. And then for this example, we're going to say it's going to be 3 months is the client package. And so you can see the total cost for base services is $14,550. And then I'm going to include income and self-employment taxes for this example. Since I'm afraid of the tax man now, I'm going to save more than enough. And I'm going to put an intentional profit of 10%. So you can see with these calculations that the total base cost for monthly services is $22,384.62. And then you can break it down. So the total base price per client is $2,238.46. And if you split that out by month, it's $746.15. So there is where the magic comes in, because by doing these calculations, you can actually see the minimum price that you need to be charging per client to reach your goals. You've got the intentional profit, you've got the intentional reserves, you've got all of your operating expenses covered, you've got your taxes covered, and you've got your owner's pay covered. So the disclaimer is this price doesn't include market conditions or value-added services. When you run these numbers, you might think, wow, those are really, really high. Like my clients will never pay that. But now you're armed with the data. Now you know that if you have a price lower than that, you're not making a profit, or maybe you're not paying yourself, but you're doing it with confidence. And now you have the information that you need. And on the flip side, if you're like, wow, that is really, really low, my client, I'm worth way more than that. Great, you go for it, but you know that you've got what your future desires are and what you want out of your business. And then you get to take action. Now you're armed with data and you can review your numbers, adjust, and then start to implement this new pricing method into your business. So remember that you are in business to live the life that you want, whether it's financial freedom, time freedom, location freedom. Just make sure you set yourself up for success by pricing your services to be profitable.